Okay, without further ado, we'll start tonight's webinar. Good night, good evening and welcome. My name is Noel O'Dempsey and I will be your host. Tonight's webinar is brought to you by Leading Sheep, the 6th iteration of Leading Sheep. Leading Sheep is a partnership between the Queensland Department of Agriculture and Fisheries, AWI, and is supported by AgForce, and of course is funded by your wool levies. Leading Sheep has 3 regional coordinators, of which I am the one for the South region. The aim of Leading Sheep is to support a resilient and prosperous Queensland sheep and wool industry. Now, before we start, I'll do a quick round of introductions. As I said, my name is Noel O'Dempsey. Our presenters tonight are Olivia Agar, who is the wonderful young lady pictured on your screen, and Robin Hermond, who is the person that's not currently on your screen but will be joining us shortly. Both Olivia and Robert are from Mercado. Mercado is a leader in market analysis for rural commodities, such as sheep, cattle, grains, oilseed and wool. Mercado, of recent times, is part of Nutrient Ag Solutions. Robert, in particular, needs no further introduction to those who have participated in earlier Leading Sheep webinars, but is currently the Executive Director of the National Council of Wool Selling Brokers, amongst his many other claims to fame. Olivia is Markets Insight Manager of Mercado. Olivia is easy to speak with and will speak first. Their aim tonight is to provide key insights to help you make informed and better decisions, in particular in relation to wool, sheep and lamb. In the background, the gentleman with the headgear on is Sam Harwood. Sam is an extension officer with DAT in Charleville. He is doing the technical stuff behind the webinar that allows it to occur. Right, without further ado, I'll hand over to Olivia and hopefully Robert when he gets away from his other meeting. So over to you, Olivia. Thank you.
Excellent. Thanks, Noel. And thanks everyone for joining the webinar live tonight. Hopefully you'll had a much better day at the races than I did, but yeah, really important timing to be talking about what's happening in the livestock and sheep and wool markets today. Obviously a really turbulent time that we've been going through. So today, as Noel said, we'll just be looking to explain the state of play, where we are now, what the key drivers are, and what we think are the main things to focus on for the outlook for pricing. So to get started, there are a lot of different factors that have been impacting our core markets, and we like to look at them as the sort of big stories and key drivers that are influencing our major commodities. So inflationary pressures have been one of the big ones. And, there's been a lot of discussion about rates rising. Again, today we've seen that happen and it's impacting us all. But it's not just unique to Australia. And as a net exporter, the economic situation of our trading partners has a really significant impact on the demand we're seeing for our products. And so when we see wallets tightening around the world, we see consumers really reverting to more affordable products. Australian wool, for example, it really is a luxury product, and Australian lamb for some countries as well, although we might like to think it's a staple. It is definitely a niche product on the global stage, and that does get impacted as well by that sort of tight economic environment of consumers around the world. Export demand is another one, and one thing in our favour has been the depreciation of the Australian dollar that's really been supporting our competitiveness in a lot of those markets as well. The domestic supply and demand dynamics as well in other countries will of course influence export activity. So, you know, markets are adjusting to prices as they are now. We're seeing some new entrants come back into buying Australian product, which is good to see, and we'll talk a bit more about that later. We've also got China opening back up post that COVID period, and you know, just the news of this week that's certainly in the headlines is that Australia is back in China's friendship circle, which is definitely good news for our agricultural industry. And then we also have new FTAs coming online, and we've seen recently, you know, the signed UK agreement as well as India. Hopefully, you know, the Europe deal gets across the board at some stage, but it seems like that's a fair bit delayed as well. Climate is the other one that's really, you know, it has a big influence, but it really has been done to death this year. We have had the change from the exceptionally wet seasons to dry, obviously, but now we have the BOM that's really downgraded their expectations of what this summer is going to look like. There is still a risk on the drier side, of course, but that extremely dry conditions that they had been screaming out about all year has really been scaled back for the summer period. We've also seen, you know, the significant supply with herd and flock rebuild really reaching its peak. Stocking rates are high, and we're seeing all of that flow onto the market. Conflict is another one, and it doesn't just impact the supply of inputs and our commodities, but also on consumer confidence. And we know that any dent in consumer confidence has a really big impact on commodities, and we're still seeing the impacts of that flow through our markets and our supply chains now. And the last thing we sort of look at is costs. You know, there's been exceptionally high costs. ABARES are saying that farmers are facing the worst trading margins in 24 years, and you will all know it too well what that's looked like. They have, you know, fallen across a lot of our inputs of late, but still significantly higher than we've been used to. So there's some of the stories impacting all our markets, but now to really hone in on lamb and sheep. And I do like to start out with the fundamentals, and I would normally talk about the long-term growth in the red meat industry as you know, the underlying driver behind the growth we're expecting. And it is still particularly relevant in the environment we're seeing now, but for different reasons. So the main sort of drivers behind growth in the red meat outlook comes from growing population. More mouths to feed, we've got more opportunity to fill that with red meat. And on top of that, we have an increasing global income, particularly in developing countries. And there's a really well accepted model that when people increase their income, they have more spending capacity, they choose to incorporate more red meat related products in their diet. And so it's the developing world that really has these big populations moving into the middle income category, becoming wealthier and choosing to incorporate more meats in their diet. So these trends are just sort of chugging away slowly in the background, increasing demand for red meat over the long term. But if you think about today's environment, you know, climate populations that are not really getting wealthier. We've got that stagnant economic activity in many countries. And so, you know, while this isn't going to last forever, that real core growth driver isn't there and isn't active right now. So this chart on the screen here at the moment is an index, and it looks at the Australian retail meat prices and puts it at a base level of 2012. So we can see how prices domestically at a sort of supermarket level have changed over time. And if you sort of follow on from that 2012 period, you can really see what the growth in our export markets for red meat has done to prices here locally by increasing that competition and that demand. So particularly in that sort of 2014 period where China really started ramping up their buying of Australian red meat products, and we can see the impact that that's had on price. So strong prices at a retail level is a positive for livestock prices because it really supports buyers and processors and export activity, but it's also a big headwind in the current climate. The high inflation, the rising interest rates, and the general cost of living crisis in many countries around the globe really puts that high value red meat product at risk of consumers turning away towards cheaper products like chicken. So you can see just how high and how much growth we've seen in that retail price level, and it really does a lot to explain, why, a lot of consumers around the world just haven't been able to afford Australian red meat. So the good news is, we have started to see retail pricing for red meat come down over the last couple of months. There is a real lag time between sale yard prices declining and supermarket prices declining. Just today, I think it was announced that Woolworths are going to drop the price of lamb cuts by 20% for the end of the year. I'm sure in the best interest of everyone, they've decided to do that. But it is a positive. We do see that decline in prices at a retail level, that it does afford more Australian consumers the opportunity to buy our red meat products and fill a bit more of their shopping trolleys with that. So, it is really a short-term problem, not just for domestic consumption, but as well for exports, that prices are at a meat level are at such elevated levels. And if you think back to that sort of rising middle class story in developing countries that I just mentioned, the affordability of meat is a real handbrake on that in the current climate. So getting more to the lamb prices and mutton now, and I won't have to tell you all what's happened at a sale yard level, but the long-term trend of increase in prices has really broken away. So for the last 10 years, we've really saw an incremental growth of prices going up, going down again, but always edging higher and higher from the previous week peak. So what we're seeing now, it's trade lamb prices are down 42% year on year. The mutton indicators down 78% year on year, and it's not just supply or demand alone that's been the cause of that, but just both moving very quickly in opposite directions. So some of the real headwinds on the demand side have been that El Nino outlook really shattering confidence in the season, as well as the drying conditions sort of in southern Queensland, northern New South Wales. In WA, the live export phase out is a really big headwind, and the industry is very pessimistic about the future over there. Even before the market was falling, producers were really talking about what they would do to reduce their flock and do more cropping instead, but we're seeing much lower prices even in WA than over on the East Coast. We also have that weakening consumer demand for red meat, and running alongside that is processing capacity limitations. So meat processors were still recovering their staff levels post-COVID-19, and they have been able to do a lot to ramp up and really process record numbers in recent times. But that catch-up phase, as they've been trying to build their labour back up to handle the supply that's coming online, has been a really big drag on demand as supply has increased. So on the supply side, we had really good years in 2021 and 2022. The Australian flock and the breeding ewe flock built up to levels where it was the largest since 2007. So just naturally having that bigger flock means we've got a bigger lamb crop that's coming online and elevating the supply that we're seeing going to market. We also are seeing elevated sheep offtake. So when we talk about sheep offtake, that's the sum of sheep sold to abattoirs and to live export as a proportion of the total flock size. And so there's dry conditions in sheep zones in WA and New South Wales have seen an increase in turnoff. And at the current rates that we've been seeing for the number of sheep that have been turned off, the flock is going to be contracting this season, which means that as we look towards sort of 2024, 2025, we will see lower sheep and wool supply into that season. But we have still got a lot to work through before we get to that stage. So this chart on the right-hand side here, it shows us the weekly lamb and sheep slaughter numbers. And you can see that, you know, year to date, we've had really elevated supply. So lamb slaughter numbers are up 9% on the same time last year, and year to date sheep slaughter is up 56%. So the black dotted line on that chart there also shows the average weekly slaughter rate from October just past. And what we can see from that is we have actually dealt with this level of supply in the past. So there is physically the infrastructure there to be able to cope with this many, you know, lamb and sheep that are on the market at the moment. We just really need the supply chain and the labour to ramp up to keep that stock flowing through to markets to be able to cope with this big lamb crop that we have on the way. But the positive is that processors have been ramping up, and you know, we have dealt with this many lambs and sheep coming to market before in the past. So with all of this lamb and all this supply coming onto the market, the question is where it's going. And if we were looking back last year, we would have said, you know, that the US was our #1 customer for Australian lamb. And if we look at the volumes that we've sent to the US for the year to date, it's down 16% on the same time last year. So that US market, which was, you know, always the heavy lamb, the finished lamb market, and our real high value lamb market, has really contracted and fallen away. So we've seen much weaker demand coming out of the US. But some of the positives though, so total year to date, we've seen lamb exports up 12%. So the extra supply is flowing through to our export markets. We've also seen some of our customers like China and the Middle East, who were really you know, priced out of taking a lot of Australian lamb, really re-emerge back into the Australian market. So volumes to China year to date are up 34% year on year. The Middle East is up 69% year on year. So we've actually sent more lamb to the Middle East just in the year to date so far than we did in all of 2022. So, you know, the real reason for that is because lamb prices have been so elevated and high, it really priced some of those customers out of the market. So now we're seeing those lighter lambs at much more affordable levels. The Middle East and China, they're back in the game and back buying. So some of the other positives as well, the UK trade deal, which was ratified at the end of May, we've seen a big increase in export volumes going there since then, so up 133% on the same time last year. So while it is a small market compared to the other big ones, you know, it does show the impact policy is having on trade that can really sort of flow through and benefit farmers. I want to focus a bit on the Middle East because we think the dynamics at play here are going to be really important for what we see in terms of supply and potential price upside for the next year. So there are a lot of reports of bag lambs being killed and being sent over the Middle East. It has been at much elevated levels this year. So we've seen a big lift in chilled and frozen bone-in lambs that have gone to the Middle East. So as I mentioned, you know, those total volumes are up 69% year to date. And even just looking at the last month, they're at record levels. So if we look at the last time we saw lamb slaughter and Middle East exports at these levels, it was back in that sort of 2014, 2015 period. So this chart here is busy, but it shows if we look at those years in terms of supply, so look at both 2015 and 2016, after having really strong slaughter rates in spring of around 400,000 head, the following February and March we saw supply really back off by about 8 to 10%. And then in the winter, lamb slaughter hit about 300 to 350,000 head, so really tightened up in what was really more a traditional supply trend, one that we haven't seen over the last few years. Because we've had those lighter lambs being held on farm, they've been weaned, they've been finished, and then come back onto the market sort of in that late summer, early autumn period as finished lambs. But the trends we're seeing so far this season are suggesting that we might not see that occur. So we might see more of that traditional supply pattern into next year, with tightening in late summer and winter as well. So there is a bit of scope for prices to improve if we do see that occur. So the premium for holding and weaning and finishing lambs should be back next year if we see that play out. Now, if Rob Herman's on the line there, I might hand over to you to talk through this trade scenario. Good.
You can hear me okay?
Yep, loud and clear.
Good. Well, thank you. Apologies for being late, but trying to juggle the meeting here in Ararat, Southern Victoria, and get onto yours at the same time. Just run out of legs a little bit there. This is what we're talking about here is some of the opportunities that we think producers are starting to consider, but also should be considering with the way prices are this year. And this example that I think Angus put this together for us a few weeks ago talks about trading a lamb trading enterprise, so buying merino weather lambs. That lamb, I'm just trying to make the screen, yeah, my screen's a little bit bigger now. So we're looking at why should we be considering this? And the major reason is that we've now got the wool price being far more supportive of a sheep enterprise as a percentage than the meat price. And so you can see on the left-hand side there, that black line is showing us that the wool price, the 19 micron price, is about 200% of the lamb price, so twice as much. So when you start to factor that into a trading operation, it makes those weather lambs again look very cheap at the moment. What we've done in this table here, if you look down, we've got low price, mid price and strong price. The low price is where we're saying, okay, we're going to buy the lambs, we're going to shear 3 kilograms of wool off them. The income from the wool, dollars per head, is going to be about $30. We're going to have a finished lamb of 22 kilograms. And in the low price column, we're saying that let's work on $3.50 a kilogram for that lamb. Now that's under the price where the market is now, but it's sort of a conservative calculation to give us a starting point here. And you can see that before there's a gross income of $109, which is the total income of the wool and lamb when it's sold, and a margin of $73, of course, without taking into account any costs. We've deliberately left the costs out because we think that will be that'll be an individual decision depending on whether the sheep are being run in southern Victoria where there's green grass, or whether they're in New South Wales where they're being grain fed, so there'll be different cost structures. And the other two columns, where we've got mid price and strong price, are just using different forward calculations for the lamb price. So you can see we work from $3.50 a kilogram in the low price, $4.20 in the mid price, and $5 in the strong price. But what it's showing us is that even using those conservative calculations, we're seeing margins on these sort of lamb trades that we've never seen before. And I think that goes to demonstrate the opportunity that's there at the moment. We're not here to tell people what to do, but we're certainly seeing in the market that traders are now starting to buy these lambs. they're seeing them as an opportunity, and they're saying, well, let's get in to a sheep that, in this case, in this example here, a sheep that will generate income from its wool and have a carcass value at the other end of the scale. One of the things that got us thinking this way is that there seems to be a real crisis of confidence in the sheep industry right now, and remembering that you know, the market has, and Liv was pointing out before, the depth of the market falls. That's all understood, not the first time, and we'll talk about that a bit soon, I think. But also that you know, people are concerned about the season in certain areas. But that said, and I think I was talking to Brett Smith today up your way, up Queensland way, you know, we are seeing an average season in a lot of areas. In some areas we're seeing a bit better than average. There are other areas, of course, where they've really missed out on the rains and are struggling. But that said, we'd like people to be thinking about these trading opportunities in a positive light, and not sort of wiping them out in terms of because you know, we're all a little bit nervous about things. We think that these are the times to be considering buying and trading. Of course, you can also transfer this to a situation where people have got weather lambs. If you've got the ability to feed them on, then you know, it's a pretty cheap starting point. So, Liv, do you want to flick to the next slide? Because I think that's, yes, that's right.
Yeah, thanks, Rob. Yeah, as you mentioned, you know, whenever something's really cheap, there's always opportunity at it. So it's definitely worth considering for those that have got the ability to feed well this season. So this brings us to the $1 million question that we've been getting over the last couple of months now, and that's, when will the market recover? And we definitely don't have the crystal ball. We've spoken about some of those sort of key periods that we're looking for in terms of when we might see some tightening of supply for the lamb market, and there could be some price upside. For the sheep market, you know, it is really going to be a long slog where we see that high supply continue into 2024. But we can look to what's happened in history when we've seen these big downturns in the cycle as to a bit of indication as to what might happen once we have reached the bottom of the market. So this is actually, you know, the 10th fall in order of about 50% from the peak of the lamb market to the trough that we've experienced over the last 50 years. So those will really remember, you know, the 1975 crash was a big one. That was the largest down cycle we've seen for the sheep market. So that was a really significant one, and what we're experiencing now or have experienced has only been second to that event. So we have seen, you know, falls in this range before, but it is definitely a significant one. And we can look back at history and sort of see what happened when the market finally did recover, when it did reach that bottom level, and how long did it take to turn around. So the rebounds for the lamb and mutton price have been relatively quick. So the lamb price rebounds between 25 and 50% from such a big peak to trough decline relatively quickly. So if you look at the trade lamb price, it recovers about 25% of that fall in 2 months. The mutton price recovers in about 3 months. And to pick back up an extra 50% of that fall, it's taken about 9 months for trade lambs and 15 months for mutton over our past experiences of these. So, you know, it does show us that the market will recover. We know that will happen. But the caveat there in this analysis, of course, is that it's only going to recover once it reaches the bottom. And, you know, no one knows for certain whether we've seen the bottom so far. You know, the prices where they've been tracking over the last couple of weeks certainly is positive, but we will have to wait and see to see whether that is the bottom or not. So I am going to briefly touch on cattle just because it does relate to what we're seeing in the lamb market. Now, for those producers that are in cattle, you may have heard about what is happening in the US and the rebuild cycle there. So The US, has been through a period of extreme drought over the last couple of years. It's sent their herd into liquidation to the point where the US cow herd's now at the lowest level since 1962. They have had some improvement in rainfall in some of those sort of key cattle areas of the US, but they've still got 37% of the cattle herd in the US under drought conditions. So this matters for two reasons. We're seeing really reduced tight supply of domestic beef from the US on the market already, which fortunately for us opens up the door for red meat exports from Australia into those markets. So we've already seen for the year to date a surge in demand for Australian beef from the US. So if we look at the numbers, it's up 76% year on year. So even though they haven't kicked into that rebuild cycle of their herd yet, just the tightness of their domestic beef supply and the low levels that their herd has gotten to means that we're seeing a dramatic increase in demand coming from the US. So as they move into 2024 and hopefully do get the rains enough to move into a rebuild phase, their demand levels are only going to pick up, which does open up opportunities as well for Australian lamb. If they're having really, tight supply of their own domestic red meat, we can certainly supply a lot of lamb into that market as well and pick up some of those volumes that we've been missing over the year so far to date. So there really are a few, silver lining and positives out there for the sheep market, and wool is another one. So I'll hand over to you again, Rob, to cover off on what's happening in wool.
Thanks, Liv. Yeah, well,
Robert, just before you start, it's Noel
Yes.
Dempsey. You got approximately 10 minutes if you can finish in that time.
Okay, thank you very much, Noel. Thanks, Noel. Look, it's interesting thing, we're seeing the wool market at low levels, there's no doubt about that. And it's interestingly that it's even lower and more attractive to our buyers because our dollar is so weak. So it's very cheap on the global markets. Clicking through those slides, Liv. This one, we want to feature a little bit about something to be cautious about, and that's the 17 or the fine wool prices relative to medium wool. And we can see on this chart here, the 21 micron has pretty much tracked flat for a long period of time now, but it's the fine wool that goes up and down, and it goes up and down dependent on the season. And the seasonal impact means that at certain times we're going to have more fine wool produced because the season is dry. It's something to watch out for with the weather reports we're seeing now, and we can already see that the premium is being flattened and squashed back. Thanks, Liv. I put in this percentile chart because we've always used these, as you know. All our wools are below the 50 percentile level. That means that since 2010, they've spent half their time at levels higher than where they are now, and roughly half their time at levels lower than where they are now. But it also reminds us we went through a long period of time where they were at high percentile levels. And these things don't last forever. Percentile tables give us a range. They tell us where it's going, where it has ranged. And, I think when we're looking at their cardings, you can see they're well off where they were. They're in the low 12 percentiles. And anyone with crossbred wool won't have to be reminded that we're seeing them at almost record low levels. Now, we know that, and we're talking about meat before, but we know that, low prices and opportunities come out of low prices. We're thinking that that's where the support will come from crossbreds, where people will start to focus on them because they can make some money out of them. The thing to watch with the medium and fine wools is that, as we get into the new year, we seem to be selling plenty of wool. I think we've got a chart, Liv, next about the volumes, have we? Yeah, so we're selling plenty of wool. We're selling more wool than we have for some time. We're selling above the 5-year average. So it means that any minor improvements in demand are not going to be swamped by a whole lot of wool that's sitting in stores. I think also a factor that's come into play in recent times is that the merino producers in the last couple of years have had their incomes well supported by mutton prices and lamb prices, and they've tended to be a bit more bullish about holding wool. That's certainly changing now, and we're seeing a lot more wool being cashed out for one reason or another. And also in the crossbred sections, we're seeing a lot more wool come onto the market. It's been sitting there for a while because the market has rallied a little bit in the last few weeks. I think 28 micron in the last 2 months has found 100 cents. That's drawn out wool. So the point of all that is that we're seeing more wool sold on a weekly basis, and we're seeing the pass-in rate, well below the average pass-in rate of last year. So any demand, and we know demand comes from the Northern Hemisphere's good GDP figures, any demand will see prices improve rather than see a lot of wool have to be chewed through before the market can move upwards. Thanks, Liv. So, Liv, I'll summarise the global. You can summarise the local if you like. Markets returning to affordable Australian meat. Anybody who follows our Commodity Conversations podcast will remember that Will Barton the other day, the CEO of Gundagai Meats, was pointing out that they've had customers coming back to them that they've lost for the last few years because of the high prices. So those customers coming back, I mean, that's the first thing you need is more customers and bring them back. That will tend to support the market. The poor economic backdrop is not a good thing. It impacts on consumer demand, and I'm sure everybody takes note of what's happening in the Ukraine and now in the Middle East. They're not good for commodity prices. Those sort of things make people tend to pull their horns in and batten down the hatches a bit and not spend money. Liv made a really good point, and we think this will impact on all red meat demand, will be this US cattle herd rebuild. The longer the drought goes on, the more females they're slaughtering and the more they cut into their herd. That will mean that the recovery will be more sustained, will be longer, and will be sharper. Do you want to just talk about the local situation, Liv?
Yeah, thanks, Rob. So to summarise what we're seeing locally, for lamb and sheep, there isn't any short-term supply side relief on the way. We may see the market quite volatile in response to this late rain that we've had, but there's still a lot of numbers to work through for this season. The premium for finishing lambs might return next year, and that's one of the key indicators we'll be looking for potential upside into next year if we see that finished supply tighten up. And for the wool market, that downside is continued to be pressured by the economic situation around the world, and it will really be dependent on signs of retail demand picking up for clothing in those Northern Hemisphere markets to really see that demand flow back through to our markets here and improve prices. So that's it for our presentation. Thanks, Noel, and we're happy to open it up if there's a few questions there to finish off before we wrap up.
Okay, thank you. For those that are technically minded, that is the QR code that I mentioned earlier. If you scan that, if that's the right term, you can subscribe to Mercato. Now we'll go to the questions. We do have some questions, and due to the mechanics of this telecast, those questions are going to be asked on your behalf by Sam.
I've just got some questions here that come from the registration, Robert. I'll just ask, what influence would a rally in the wool market have on store sheep prices?
Yeah, good question. It would certainly have a positive impact. I think there's no doubt that I think the wool market has certainly got upside potential, but it's the big picture that's keeping a lid on it. The big global picture is not conducive to demand for wool. We know it's a discretionary spend, and so when everybody's a bit nervous, when you've got inflationary trends and cost of living going up, wool suffers a bit. But if we were to see a lift in wool prices, it would translate into some really strong demand for, I think, for merino sheep at these levels. And look, we've seen merino weather lambs, being sold for $20 to $30 to $40. When you start to do the sums on those, Sam, and you're going to shear them, perhaps in February, March, April, you're going to be ending up with a pretty cheap lamb after you sold the wool. And I would think that would be attractive to a lot of people. And we're also starting to see just, the last 10 years, I suppose, Sam, the prime lamb producers have been pretty buoyant, and they've sort of thumbed their nose a little bit at the merino people. I think we're starting to see that turn around now, and that'll be interesting to see how that plays out. Thanks.
Yeah, no worries. The next one I have is which has probably been covered a little bit, outlook of returns for wool and sheep meat in the next 12 months.
Liv, do you want to talk about the sheep meat? I think the wool we're pretty clear on.
Yeah.
Yeah, thanks, Sam. Look, there's plenty of room for upside from the low levels that we've seen over the last month or two. For lamb, I pointed to some of those sort of key outlook periods, but there still is strong fundamentals backing red meat demand, and so we know we've got this big supply to work through. But there are, as we sort of see processors continue to ramp up their ability to work through that supply. If we see improvement in the global conditions and some of those customers, even the Australian customer, come back to buying a bit more lamb over the summer and into next year as well, that will all be positive for sheep meat as well. So there are definitely some positives there, and rain is always the blessing of the market, and so any more of that will also do us good.
Cheers. Thanks for that, Olivia. The next question I had come through is, when will the current discounts for high wool vegetable matter come back to normal?
Good. Yeah. Look, the vegetable matter problem is perennial, really. But the thing to watch with VM discounts is they very closely correlate with the amount of high VM wool that's coming through. When there's not much high VM wool coming through, the discounts drop away. When we get the big volumes, they increase, and so it's a sad. It makes selling wool very difficult, because if you've got that problem on your farm or on your property, then there's times when the big discounts are they're just disheartening. We've seen pretty severe discounts in the last few months. When will they end? I think we're only going to see them when we get into the autumn break, when the volumes of high VM wool starts to drop away again. So it's not a good outlook for those wools with high VM. And of course, we know that it impacts on the skin value of sheep, and it's just a problem that I wish I had the answer at farm level to fix it, because once it gets into the wool or into the sheepskin, it's a negative for sure. Thanks, Sam.
Cheers. Thanks for that, Robert. Another question that we had is, what are the 3 best sale yards in Australia to monitor and to get a good idea what the sheep and lamb markets are doing?
We've never had that question asked before, Liv.
No, but if you remember, Rob, the research we did, it was a while ago now, but looking at the leading indicator sale yards across Australia, and I know Wagga and Forbes were 2 of the key ones in there, but I'd have to take it on notice and go back and look at that research again.
Yeah, look, my recollection is that Wagga is the king, and everything else fed off of that. And when we did a roadmap of market prices relative to that, everything flowed off Wagga for sheep and lamb. Cattle we'd have to take on notice. I'm not sure, but for sheep and lamb, I'd be following Wagga. At certain times early in the year, early in the season, Dubbo becomes very important, and then very late in the year, if we're talking about lamb, Hamilton becomes very important. But for week in, week out, Wagga is the market. And we even noticed, I'm remembering now, Liv, but we noticed that there were some markets quite close to Wagga that were at pretty big discounts to Wagga. And, we thought that was something of interest, which, deserves a bit more research, to be honest. But yeah, good question, that one. I think we'll have to think more about that, Liv.
Another one I've had come through the chat is a question about sharing crossbred lambs into the feedlot and pay skin disposal on sale, or accept a slower finish and get something for the skin value. Is that something you can answer, Robert?
Not really,
No,
but
yeah.
I understand the dilemma that's being outlined there. I mean, this is extraordinary times when you think that a sheep or a lamb skin's not worth anything. It's hard to imagine. And we know there's times when we've saw very good lamb skins making, more than $20 per skin. The issue about shearing them is a really, I think I'd encourage people to do their own sums on their own property. So cost of shearing, what is the value of wool? And we're now seeing, I noticed Andrew Woods reported this week, Liv, that we're now seeing, some more support in the crossbred market, which is supporting that wool, paying for its shearing cost at least. But then, it's an equation that each farmer should be doing themselves, Sam, because if you don't shear the lambs, does that impact on their finished product? Can they go into the feedlot unshorn, etc.? So there's always things to consider. It's a very complex one, that one.
Okay. Thanks for that, Robert.
Sam, it's Noel here. We have time for 2 more questions.
Okay. I have another one from the Rego. When I read the market report for the sheep and lamb sales I attend, it often seems that I was at a different sale. Is this because only some sales are reported? If so, what are the criteria used?
Yeah, look, it's an interesting one. I take the view that the people reporting on those sales are good at their job. Therefore, if I come away thinking, I don't agree with that, I'm more likely to think that I'm probably wrong than they are. We've got to remember that they're also checked regularly. And one of the ways, I mean, you don't have to check what the price was, but they have to check how many kilograms of meat and what the yield was. And so the way they do that is they follow lambs through the processor. So they assess them at the market at 33 kilograms, and they'll follow through to check and see if that's right. So that's my view is that the market reporting is fairly accurate, is fairly good, better than mine, to be honest. So we tend to stick with it. Thanks, Sam.
Cheers. Thanks for that, Robert. Question: are sheep and lamb abattoirs making record profits currently?
Probably. It's very difficult to tell. And look, and of course, no processor ever says they're making record profits. I think we need to take into account the fact that their cost of doing business, their operating costs, are higher than ever before. But that said, we know that the margin between the meat price
Did Robert drop off, or was it me?
Yeah, I think,
looks like
I
he
think,
had.
yeah, it looks like
Okay.
Robert's dropped off there.
I can pick up where he left off, but no, we know that there's, you know, a record difference between the price we're seeing at a retail level compared to what, you know, the product sheep are being sold for at a sale yard or to the abattoirs. But whether it's exactly the processes, you know, eating all into that, or whether there's other parts of the supply chain as well that are soaking up some of that extra value. Unfortunately, there's no data published that'll tell us exactly who's taking what, but yeah, there's certainly a big gap in between those two ends of the product at this point. So yeah, thanks Sam.
No worries. Thanks for your answers there, Olivia, and thanks,
Right.
Robert.
Thank you, everyone. Olivia, Robert, for your insight. Again, I will remind those that are technically capable to look to the QR code if you wish to subscribe to Mercado. I'm conscious of the time, and I realise we've gone a little bit over our scheduled slot. 2 quick comments before I go. One is a reminder that when the webinar finishes, you will receive an email with a link for feedback. The feedback link is also available very shortly in the chat box. If you want to complete it immediately, that would be great. We at Leading Sheep really appreciate your feedback. It helps us to plan better events and to carry them out as best as we can. I'd like to thank Sam for the work that he's done behind the scene, and particularly Olivia for carrying the load for most of the webinar, and for Robert and his contribution. For me, the opportunity of trading in weather lambs was a very interesting insight. Thank you, everyone, and please provide your feedback. Bye.